Hey everyone, welcome to our podcast, BecomingYourOwnBank.com, and we are going to be continuing our FAQ, Frequently Asked Questions series. Today we're going to be talking about policy loans, how policy loans work, how do you get a policy loan, what happens in that process. So let's talk about it. How do, first of all, policy loans work?
Well, at the heart of it, it works just like any other loan, I think. It can be explained that way. You are requesting money from the insurance company on a loan basis, and they're giving it to you with an interest rate attached to it.
Right.
But going back from there, you're able to borrow money based on the amount of cash value you have in a policy. So if I've got a policy with $50,000 in cash value and a $500,000 death benefit, the amount I'm able to receive in a loan is based on that cash value, not the death benefit.
That's a good point to clarify, because oftentimes I've been asked that. Is it based on the death benefit or the cash value? Cash value is what that's based on. So the money you've accrued there is what you can borrow against. Now, when the insurance company issues you a loan, understand that loan is from the insurance company. Right now, it's said in a lot of different ways. Oftentimes you'll hear paying yourself back, and that's simply because as you pay that money back to the insurance company, the insurance company takes those dollars at the end of the year. That's part of their investment pool, so to speak, and that's distributed to policyholders in the form of a dividend. So, that's where you'll get that. But really what's happening is you're paying the insurance company, you're getting a dividend that is separate from that. There's no correlation there between what you pay and what you get in your policy, other than the fact that the insurance company is trying to judge their policy loan rates based on what they're expecting in dividends. That's really the only correlation. There's no direct correlation between your policy and that payment that you're making.
Right. Yeah, so let's go through the process. Let's say I've got a whole life insurance policy. I've got some cash value, and I want to borrow from it. What do I do? What's my first step?
Well, it's pretty easy. I mean, you depending on the company, there's a page or a 2-page document that essentially asks you what your name is, what your policy number is, asks you how much you want to borrow, usually an option like maximum loan, give you everything that you can out of the policy, or you specify what you want them to send you. There's no qualification, there's no credit check, there's nothing like that, simply because and we're going to refer back to this idea that it's collateralized by the insurance company, because that's what frees up this loan process. That's what makes it so simple. That's what makes the flexibility of the loan repayments there. But before we get into that, you're essentially just filling out a form, signing it, faxing it into them, and takes about a week to get that check.
Okay. So let's get into this flexibility of the loan. Where you talked about collateralization, and these companies, you have to understand that the amount of money you can borrow is based on your cash value. You can't borrow above and beyond that amount. So what that tells you is that every dollar you receive in a loan is 100% collateralized with the money inside your policy.
Right, and even to take that a step further, the insurance company offers you a loan based on that collateral, and they will never be in a situation where they do not have collateral for the outstanding balance that you owe. So when they issue you if you get a max loan from the policy, they're actually going to hold a year's worth of interest on reserve, so that is collateral for the year. So right. If interest rates are 5%, I'm going to get a check for about 95% of my cash value if I were to take out a max loan. And that's important to note, because that's what keeps them collateralized. That's why they don't have to it's not they're
pursue.
They're not needing interest that next month. You've got a year window. You can start your payments when you want to. So that opens up a lot of flexibility to keep them collateralized for a year. And I took a loan out a couple months ago. I didn't pay any payments for about 2 months, and then I paid most of it off. There's no questions asked on these loans. You can pay them back as fast as you want. You can pay them off in 100 years. It just does not matter. Balance of the loans is paid off with the death benefit if you were to die.
Well, let's play devil's advocate a little bit, I guess, when you say I could take 100 years to pay off this loan. Is there ever a way that I could lose? Is there a way that I could be hurt by not paying back my loan? Will that ever happen?
As long as you're paying the interest.
So as long as I pay interest only on that loan, my policy is never going to collapse. Nothing like that's going to happen. Because I'm sure people have that worry, because that sounds too good to be true. You receive a loan and you can just pay it back whenever you want over 50, 25 years.
Yeah, I mean, well, keep in mind this. I guess to answer the question, if you borrow out all your money and you never pay it back, the insurance company, like we talked about, that loan payment isn't correlated directly with your account, right, or your policy. So there may be a year where you pay 5.5 and the dividend's 5 or 5.25. You'd have to come up with that difference. That's really the only situation where that would occur. But the reality is, why would you ever not pay that back unless you're taking an income, which is a different discussion, and that can be coordinated well with the insurance company and deciding what to take out. But why would you ever not plan on paying that back? You're going to need money in the future for future obligations, so you got to save that somewhere. I mean, that's where you're doing that, and you want to make sure that you really don't want to plan on ever dragging that out. That's not saving you money. Saving you money is paying that off quicker, is having more money, more access to capital. That's really why you would use this system. If you're trying to cheat the system will fail you.
Right.
Yeah.
And that gets back to the difference between borrowing from a commercial bank versus your insurance policy. You are hesitant to make an extra payment or additional payments to that bank loan or to that commercial bank because as soon as you fall on hard times, they're going to make you qualify for that money again. And if you don't have a job to show your income, you can't get it.
Right.
Whereas as you repay this loan back to the insurance company, you're creating more accessible cash as time goes on. You're reducing your lien, which equals more accessible cash in the future. So you would, like you said, it's not a smart thing to do to not pay back a loan because you want to have access to all your money.
It makes no sense. I mean, if I buy a car today with my policy and I never pay it back, what happens in 5, 6, 10 years, however long my car lasts, when I need another car?
Yeah, right.
I'm going to need money at some point. I got to put it somewhere. I got to have it come from somewhere.
Right.
So you're going to pay that back just by the fact that you're going to continue to save for future purchases.
Right.
But anyway.
So what else? What other common questions do you guys get on this loan process?
On loans, I don't know. That pretty much explains it, in my opinion.
Yeah.
Okay, so it's fairly simple, I feel like. We're receiving a loan from the insurance company. We're paying the insurance company back, and it is in our benefit to pay back those loans as quickly as we can.
Yep. And you're welcome to, I guess the podcast that goes well with this one, another frequently asked question is, why do I pay extra? Why do I charge myself extra? And go check that podcast out. That's got some great information as well. And as always, go surf around our site, becomingyourownbank.com. We're constantly adding new quality content, podcasts, videos. You're welcome to check all those things out. Those are great resources. And get in touch with us if you have questions or comments. info@becomingyourownbank.com. Also, give us a call, 1-800-321-1636.